Hello, good day, everyone. So, good morning. Okay, so let us start our briefing for today. So, today is 29th July. It's Thursday. Okay, so let us take a recap on the previous important economic data. So, the first one is Australia inflation rate. So, the previous is 1.1% and forecast is 3.8%. So, the actual is same as the forecast 3.8%. Okay, so this one didn't bring much impact to the Aussie dollar. Okay, so the second is Germany GFK consumer confidence August. Okay, so the previous is negative 0.3, the forecast is 1.0, so the actual is negative 0.3 again, which is lower, slightly lower than the forecast. So the EUR should be taken as negative or bearish. Okay, so the third one is Canada in a inflation rate yearly. Okay, so the previous is 3.6%, so the forecast is 3.2%, and the actual is 3.1%, slightly lower than the forecast 3.2%. So we should take the Canadian dollar should be taken as negative or bearish. Okay, so when come to the next one is USEIA crude oil stocks change. So the previous is 2.108 million. So the forecast is negative 2.928 million. Okay, so the actual is negative 4.089 million. Okay, so this one should be the crude oil price should be taken as positive. Okay, because the demand is getting higher and the stock is getting lesser. Okay, so the next one is Fed interest rate decision. So the previous is 0.25%, the forecast is 0.25%, the actual is same as 0.25%. They remain their interest rate. Okay, so this one didn't bring much impact to the US dollar, but when come to the when come to the Fed press conference, it has a big market volatility. We can let us go to the market graph here. So as we can see that when yesterday at last night 2 a.m. o'clock and 2:30 a.m. Okay, so when the Fed press conference here, we can see that the bring here the big market volatility here. This one bring effect to the other forex major pair as well. So as we can see here, there's a big market volatility here. Okay, they're all caused by the Fed press conference last night. Okay, so we continue our PowerPoint here. So let us take a recap on previous day market volatility. This one is gold. The volatility is rise 170 pips, as we can see here at the right side, the market graph on our right side here, inside the red rectangle here. Okay, so the market volatility factor, let us read the factor here. So gold prices recovered their earlier gains on Wednesday. Okay, so spot gold closed at its highest level in more than a week at 18.7.1 per ounce. Okay, so prior to the Fed's policy statement, Powell pointed out that the US economy is still facing risk from the Delta variant virus. Okay, so and the Fed is not considering raising interest rates in a long time. Okay, so this one is actually bring bad news to US dollar, which is we can see that the gold price here rise up a lot. Okay, so when today we have to take when come to EU section today, we have to take note on this important economic data, which is Germany inflation rate yearly. Okay, so the previous is 2.3%, forecast is 3.3%, and the data release time is at 8 o'clock tonight. Okay, so if higher than expected reading, we should be taken as positive or bullish for the euro dollar. Okay, so a lower than expected reading should be taken as negative or bearish for the euro dollar. Okay, so when it comes to US session tonight, there are two important economic data we have to take note. So the first one is US GDP growth rate quarterly, okay, at once. So previous is 6.4%, the forecast is 8.5%, and the data release time is at 8:30 tonight. Okay, so if actual is higher than forecast, this one is good for currency, which is bring good news to the US dollar. So when the second one is US initial jobless claims 24 July. So the previous is 419K. So forecast is 380K. So the data release time is at 8:30 tonight, So if higher than expected reading should be taken as negative or bearish for the US dollar. So while a lower than expected reading should be taken as positive or bullish for the US dollar. Okay, so when it comes to today, the market update for gold today. So the resistance level of today is 1819. The support level is 1799. So my personal opinion is still considered bullish. Okay, so why bullish? So let us read the factor here. So the Fed stated in its latest policy statement that despite the rise in new COVID-19 cases in United States, so the US economic recovery is still on track. Okay, the tone of this statement is still optimistic. Okay, and pointed out that discussions surrounding the final withdrawal of monetary policy support are still ongoing. Okay, so after the announcement, the price of gold fell slightly because this statement is actually bring good news to US dollar. Okay, so however, Powell stated that the increase in Delta variant virus infections may impact the recovery of the labor market. So, and that the Fed has a long time before considering raising interest rate. So this one is actually a dovish speak, which is not good for the US dollar. So after that, the price of gold turned to rise. The dollar fell slightly, which brings support to the price of gold. So as Fed Chairman Powell continued to release dovish signals, the US dollar index fell for 3 consecutive days. Okay, so boosting the gold price bull confidence. So in addition, the rising epidemic situation also brought some hedging support to the gold prices. Okay, we can see that the majority of the factors here are bring good news to the gold. Okay, so the price of gold may rise further, but if the US GDP Q2 growth rate is strong, it may suppress the price of gold. So investors still need to remain vigilant. So in the day, we will focus on the US GDP Q2 growth rate and initial jobless claim data. Okay, so when come to let us take a look on the market graph here. So if the gold price rise above 1819, the target we should put it on. I'll put it at 1825. So if the gold price fell below 1799, then we should change our bullish from bullish to bearish. So and a target we will put it at 1793. So that's all for our briefing today. So wish you have a good day and see you again. Bye bye.